we should just put a stake in the heart of all of these little catchy little sayings and patterns because they're fun and they're interesting, but they do not work. None of them work, period.
What,
so,
as goes January? So
yeah, the January thing. And so, like the other day, somebody was telling me that the market was really high, but they couldn't sell because the market goes up like 74% of the time in December or something like that. And I said, right, and Hillary had a 93% chance of winning the election. So, you know,
so everything's wrong.
We do not know. Nobody knows. But let's pause for a moment here because we do know this. This is the second longest rally in 85 years. The market is getting stretched on valuations. Do I know where it's going tomorrow? No. Does anyone? No. But it wouldn't be a bad time to, say, rebalance. If you're going to need this money and you really can't afford to go through a correction, then maybe take a little off the table. To me, there's no reason to recognize the fact that it is quite high.
If someone has been in love with bonds for 30 years, it might be time to focus more on equities than they have been, right?
Well, yes. I mean, I was thinking now, and the thing about bonds is they've corrected, so you know you're not buying at the bottom. You know, so maybe it is time to rebalance. Yeah. And going back to Trump for a minute, I mean, I get all these calls from people, and being in New York, especially from people who didn't vote for Trump, they say, I'm getting out of the market. He's going to destroy the economy. And then some people are saying, no, I love Trump and putting the money in. Everybody's advice there is ignore Trump. I mean, what do you know about what Trump is going to do that no one else does in the market?
No edge.
Really?
Right.
Do any of us have an edge other than maybe members of the immediate family? I don't think so.
But you have heard him, you've heard Steve Mnuchin on Squawk Box a few weeks ago talk about how one of the top priorities is cutting the corporate tax rate, which would have a direct impact on earnings and the market.
Well, we do know some things and we can make some predictions, and that's now reflected in the market fully. And I think it's not irrational that the market has gone up since Trump. There's the corporate tax thing could be very big. Tax reform could be big. Infrastructure spending could provide stimulus. I mean, there are solid reasons, but that is now baked in.
You and the Washington Post point out that in this summer he said the market was a big, fat, ugly bubble. He hasn't really weighed in on valuations since. He has said that he sold his positions in June.
We know, yes, exactly. No, yeah, he sold for conflict reasons. Yeah, I thought that was very amusing that, you know, he weighed in on this. By the way, I will say this for Obama, because I vividly remember this. February of 2009, he said the market was really undervalued and it was way too low. And I mean, he almost called the bottom to the day. So I give him some credit as chief stock picker in chief.
I don't know.
But Trump, I think
talking about stocks at all.
My guess about Trump was well, it was overvalued until I was elected, and now it's fully reflecting all the wonderful things I'm going to do. I can't speak for Trump, but if channeling Trump, that's what I would be saying.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.